All right, guys, today's Monday, April 14th, and last night I posted an 11+ minute video explaining what the probability of today's move in the stock market would be, primarily on the S&P 500 indexes, SPX and SPY. If you watch that video, you'll see exactly why we came up to that determination, including the options chain premiums, what the market makers were pricing into tomorrow's move, looking at the VIX indicators, the 30-year Treasury yield, looking at the futures market and commodities market, and then overlaying all that data onto the S&P 500 SPY daily chart to then throw in the technical analysis side to give us multiple layers of confirmation into today's move. So what can we say about this move? Well, let's take a look. If we look at the chart from last night, what you're going to see is we ended where this black box is right here. Okay, and so the move was going to be somewhere in between this fair value gap and this fair value gap. What we had said was this move was going to had a high probability of accelerating into the upward trend of the first fair value gap, and that it would either break through slightly or it would return back down to the lower fair value gap and pinball in between before it found positive support or resistance. And so what actually ended up happening, let's take a look here, is we did command an upward trend to the upside, and we hit the top of that fair value gap as resistance before trading open. So this was pre-market hours. So that was pretty incredible. So the move actually went in our direction exactly the way we said it would. And just to add insult to injury, it went for the exact percentage we said it would. About 2.13%. I'm measuring about a 2% implied move. Okay, it's pretty amazing. Now, what we actually ended up forming was a secondary fair value gap right here. And so you can see that gap fill from, I think this was Friday night's aftermarket to Monday morning's pre-market. You can see that fair value gap that we formed. And so now we've formed an even tighter channel. And what you can see now is the market is about to close and has closed right at the tip of that fair value gap. And so what happened today was an obvious move. We saw that we were going to touch fair value gap and we were going to pinball back and forth, but that consolidation got even tighter between two closer fair value gaps. Now, what made for an excellent trade on this was this fair value gap at the bottom. I actually played a call on SPLG, which is a sister to SPY, but it's 1/10 the price. And the move was to buy in at 538 at or above. And the move was then to sell at 541.90, which was what I sold for. So with that options contract, that gave me about a 3.93 basis return with a delta of 65. So that's about a $240 implied move in my direction on an options contract over less than an hour's time, give or take. If we actually measure the time on that, when the trade actually executed, which was right here on this first green candle, and the trade executed, that's actually an hour and 45 minutes. So hour and 45 minutes for a small call contract with a stop loss at 15%, which was actually below the 200-day moving average. And you can see we almost got stopped out. Okay, almost got stopped out, but we didn't. So that's the good news. And so this was a good trade for me, but long term, this was an even better trade because this upwards trend continues upward, as you can see here. Okay, so we're going to do a more consolidated view here tonight. We'll talk about this again, but please like, share, subscribe, and follow for more technical analysis and trading information. We try and keep politics out of all this, and we just look at the numbers and we decide what the market's going to do based off the numbers, even if I personally disagree with what they say.